Just conditioning yourself mentally.
Why price does this and why price does that.
Time and price.
Algorithmic principles.
Liquidity and inefficiency. Understanding that. And where is the most likely draw on liquidity. Folks, that's all this is.
You got to be able to react to price. Your job is not to be able to predict the future. It is absolutely your job to predict the future.
When I talk about things that should happen in the marketplace, the primary function behind the accuracy is I'm only really focusing on specific times. Because those times
are algorithmic.
Alright, I want to give a quick crash course real quick. So in price, we have trends. We have an uptrend, alright, and then we have a downtrend. Uptrend, downtrend, and then consolidation, where price is just moving sideways. It's not making a new high or it's not making a new low. This is sideways moving, so it's consolidation. Those are the three trends in price. When you have swing points, it takes 3 candles to make a swing point. 1, 2, 3. This is a swing low. It's going higher. 1, 2, 3. This is a swing high. It's going lower. All right. Swing points. 1, 2, 3. It's trying to make a swing low, so that means it wants to go higher. 1, 2, 3. It made a swing high, so that means it wants it to go lower. Gaps in the market. Here, you see this green candle? You see this candle here, and then this candle here. It never came back into this green candle. It's just a green candle with nothing next to it. That was a gap in price. This candle here came and filled it in with the wick, and this one filled it in all the way with the body. With candles, these are the bodies of the candles. These thicker portions of the candles here. Wicks are the tails. Sometimes you see them at the low or the high of the candle. Low of the candle, small wick at the high of the candle, right? And being bullish is when price is buying. Being bearish is when price is selling. And you have 4 phases of the market. You have consolidation, which some people know it as accumulation. This was consolidation, because see, it was sideways movement, accumulating of orders. Then you had expansion. Then you had a retracement, followed by consolidation. Then you had an expansion, followed by a retracement, consolidation. Pretty sure we're going to have an expansion again, right? So that is a quick crash course on everything. And also from this high to this low, that is your price range. Between this price range, you can just look at the middle of it. From this high to low, look at the middle point. See, that is the middle point of price. Very easy, very simple. You don't want to buy at a high, you want to buy at a low. You don't want to buy in the middle because price will be choppy like it is here. And if I get my fib to let you guys see how easy it is to spot the middle of a range. I was just a tiny bit off, but that's fine. That is the middle of the range. You want to buy here, not here. You want to sell up here, you know. But it was just a quick crash course. I'm trying to have it beginner friendly, but let's get into the video.
Welcome back to Wall Street, and let's break it down. Today's date is January 21st, 2025. Just now approaching the chart, and we're going to break price down right now. I'm going to the daily time frame first. As you see, the daily time frame is in a premium. We have hit our target, which was that yellow line, so we're trading above the daily high right now. Looking at the 4 hour, we're also in a premium. We're taking liquidity right at that 4 hour candle. And as you can see on the 1 hour, right above that swing point, we're taking liquidity and filling in the gap a little bit. 15-minute, we have a premium as well. We're taking liquidity above that high. What's underneath that 15-minute candle? A 15-minute fair value gap. And we have a 5-minute liquidity grab as well. And we have 1 minute consolidation, right? And we're taking liquidity above that long wick high. So what this possibly telling me is we're going to go down. So beautiful, beautiful, beautiful descent that's starting. And as you can see, I'm loading up my time frame, loading in my entry. And let's get the spamming on this right now. As you can see, a nice, beautiful consolidation to expansion, right? So we have our small, quick retracement, and we're going to have our continuation. Beautiful, 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 beautiful. And knowing that the daily time frame right now is in a premium, it took a old high. I would not be interested in having a long trading session. Why? Because once you are already at that higher time frame area, more than likely we're going to keep on accumulating. So I'm not really interested in just chasing sales or buys. I'm pretty much done for the day because I know that we'll possibly be in this area for a minute. I want price to really expand so I can look for more clean trades, right? And really see if the price want to keep going up or it wants to, respect that we're above a daily high and retrace some to fill in these 15-minute gaps. And if it does it today, I don't care because I made my amount for the day and I'm going to be pretty much done. So right now, let's just look at price. You see how we have all of this green downside? So that basically means that we need to fill in these gaps. We need a little bit of red into these areas because that is nothing but imbalance in price. So we have to balance it out. We have to offer sellers in these areas. Because if I take your liquidities, you going to tell on me. If I take your liquidities, you going to tell on me. And this is when I turned on the social trading. I wanted to see what everybody was basically looking at. And that's when I realized that we do not have too much dumb money in the market right now. We have everybody pretty much looking at it the correct way. They're looking for price to expand down. But the only thing I didn't like is they are trading in a discount on a lower time frame, which that is fine. That is fine still, but you have a chance to where price will possibly reverse on you and you have a harder time winning when you sell too close into the discount. So we don't have too much time left on this countdown. I know that price is going to clear for me. I sold in a pretty beautiful area, and I'm not really sweating it. And see, look at all these breakout traders getting ready to get in for this trade. They are in a deep discount, and they just spam and sell, spam and sell, spam and sell, and I lost. Why would you be sitting right here constantly just spamming sales? And now that you took a loss, you just looking crazy like what happened in price. So I'm pretty much done for the day. And that was pretty much it. So we hit the old daily target, which was, this price low, where this red candle is with that long wick. It took liquidity. And liquidity basically stands for any type of low or high. Once price goes beneath that, it took liquidity. So we took liquidity from this low at the bottom, this one right here, and we went higher. So my goal was for us to aim and come back up here. We are doing that, right? So knowing that we took higher time frame liquidity now, we are now moving more crazily because we're consolidating, right? So the daily is on the premium. We see that the 4 hour is in the premium, right? So we're above this old daily high. Anytime we're above an old daily high, we must return to that previous high, find support, or keep breaking lower. We go down to that 1 hour. The 1 hour candle is not going to find support. Why? Because, one, we have a long wick here. So price is grabbing liquidity. Our objective now is to get here. This is our new trading objective. And so knowing that the daily is consolidating right now, I'm not having interest in trading this for real. So that's why my trading session will not be long. I'm getting strict on what I like to see because look at this. That's straight consolidation. Even though it's moving on the higher time frame, this is consolidating. See, it's not really going anywhere because it's at a new key area right after it took that liquidity, right? It consolidated. So now we have consolidation. This could be the form of expansion that it's trying to do, but I want to be sure. So we have 15-minute liquidity being grabbed, right? So that means we should have a 5-minute fair value gap, 5-minute gap to fill. But no, what is the 5-minute doing as well? It's accumulating, it's consolidating. A green candle, then a red candle means we made a high. A red candle And then the green candle means that we made a low. Green candle and red candle mean we made a high. So we had a high, low, lower high, low, that we should be forming. Lower, low, whatever the case may be. But we're going to see. So, yeah, I'm not interested in this right now. But that was my trading session, and I'm pretty much done for the day. And as you can see, we still are forming that, trying to push, but it's not going to be as clean. So when the higher time frame, like the daily, is consolidating, I usually probably want to get into a sell entry anywhere around these regions here or literally up here. Somewhere here is like the middle of the range. What I mean by that is from this low to this high, this is literally like the middle point of everything. So everything here is going to be consolidated, right? I don't really like that. That's the middle point. See how perfectly prices going down? So as I say all the time, welcome back to Wall Street. Make sure that you guys tap in, check the description and everything, and let's basically, start 2025 off the right way. And, stay tuned to my channel. Peace and love. I'm out.